So record is in progress. Okay, so we are actually doing a course called security analysis, and if you understand securities, and I believe I've taught this in investment and portfolio. I've explained what securities is, so you should understand securities. However, let's just look at the topic, the course name, and give a general, get a general understanding on the things or what we are going to delve into as we proceed with this course. So the course security analysis. We know securities is financial assets that are traded on the financial market. And this includes shares, it includes bonds, it includes derivatives, okay? And they are traded on Ghana Stock Exchange. Then you see analysis. Analysis means assessing something, assessing something. What is happening? I'm coming in. I don't know. Hello,
Hi, madam.
are you with me? That is
Yes, please.
Very true.
okay. So analysis simply mean assessing or evaluating something. So if you say security analysis, it means you assessing the financial asset. Okay. And if someone is assessing financial asset, what could be the purpose? The only purpose is the person will probably want to invest in or advise or make recommendations on um an investment. Okay, so that is security analysis, and today we are going to go into overview of financial and security analysis. Overview of financial and security analysis. I'm actually not feeling well, so I'm just doing the overview. Then we will go. Let me go to my slideshow. Okay, so at the end of this topic, you should be able to understand the purpose and role of security analysis in making informed investment decisions and minimizing or managing risks. You should be able to distinguish between different types of security analysis. You should be able to identify and explain main types of securities. You should be able to analyze investment approach and strategies. You should be able to apply financial and security analysis concept to assess investment. So we are starting. Like I said, security analysis involve evaluating financial securities to determine intrinsic value and risks. Okay, so you want to know the actual value of the securities and the risks associated. So you cannot just get up and say, "I want to invest in something." You can't just invest. You can't do try and error with your money like that. Okay, your hard earned money. I don't think anyone will just get up and say, "I'm going to invest." That will be you probably being affected by behavioral biases. Okay. Oh, yeah. So that one is there. But then for you to do a proper investment, you need to do analyze whatever you are investing in, even if it's not securities. You have to evaluate, assess, and know that yes, as my money goes in, I'm going to get my money back. I'm going to get my money back. I'm going to get returns on it. Okay. So yeah, it is you have to assess because there's a saying that failing to plan is what planning to what fail, right? So security is kind of planning how your money what you get on your money. Okay. So you cannot just get up and say I'm going to invest. Purpose of security analysis. You want to identify undervalued asset, undervalued, overvalued asset, and fairly priced security. So these two, undervalued mean that the value or the price of the shares of a particular firm is lower than what is supposed to be, right? And when it's over, there are some shares that is overpriced. Okay, then we have fairly priced, meaning this is reflecting the actual intrinsic value that it should have. So that is the first purpose. Okay, then we have to minimize risk. Okay, so whenever we are investing, it is good we minimize risks. You cannot just go into investment. So we will get into the actual security analysis, and then we have to maximize expected returns. Okay, so if there is an investment option that will offer you higher returns at probably an equal risk, uh, with to an investment that have equal risk or even higher risk, why would you go for that one? So all these things will be made known to you when you do security analysis. Okay, then we have importance of security analysis. It helps to evaluate trend, and that by trend, sorry, by trend, it's normally associated with the technical side of assessment, where you are going to look at price movement. Is the price always rising? Volume of trade, because demand and supply determine the value of asset or financial asset. Okay, so if people are probably demanding a particular asset, there's a high likelihood that the value of the particular asset is going to increase. Okay, so we are able to identify trends in terms of price, in terms of volume, what is happening to a particular firm's financial asset, then and decide. It also helps you to set financial policies. Then it helps you to bring long-term plans. Some of these investments are very long-term. For instance, if you are investing in shares, they are normally long-term. Okay. Now, company bonds are also normally long-term. Then, but government bonds is short-term, I think. Then, so it helps you to make a long-term plan of, okay, I want to be investing in this and this for this period. So it help you to identify viable investment, healthy investment. It help you to identify investment that will benefit you, that will suit your what objective. Okay, like I said, it's not everyone who go into who invest into something solely for returns. Seriously, there are some people, they invest in something just for other purpose. Okay, the other purpose. So people have their objectives for investing, and they need to achieve it. So that is it. Roles of security analyst. Roles of security analyst. I don't know how many security analysts we have in Ghana, but well, maybe I can be one of them, because sometimes I bring information on the kind of asset to invest on my platform. But let's go. It helps to analyze financial statement. So it is one financial assessing, analyzing or assessing financial statements. One of the fundamental way of assessing the performance of a firm. So you get their financial statement, their profit, you look at their profit over a period of time. We have compare the where that we compare various years to years, whether the person is improving, is the person making profit. You go to their balance sheet, you are looking at comparing their asset to their liability. Is their asset more than their liability? So in case there is bankruptcy, they have even enough asset to pay off their asset and capital. If they put them together, can it pay off their liabilities? Okay, so you look at all these things, you look at their cash flow statement, how is so that all these things, you look at them, then you decide whether to invest or not. So this is what financial analysts do. They do assess financial statement, and yeah, fo, forecast first performance. So by doing that and probably looking at trend performance over the period, they can forecast which firm is going to perform well. So sometimes the person come at, oh, this particular firm, you have to invest in them, this, that. So because I've assessed their fundamentals, and It's telling you this particular share is going to do what, this particular firm shares is going to do what, so invest in it. Estimate the intrinsic value. I say the intrinsic value is what the actual value of a share. So there are some shares, the price they have on the Ghana Stock Exchange or any financial market is overvalued. Okay. And some too is undervalued. Okay. So one of the things, even when it comes to a firm wanting to acquire firm, sometimes they look at the firm, this firm is undervalued though. If we buy it, we can do things well and the price will what? Shoot up. Okay. Then security analysis, after doing all these things, what are you even using it for? The purpose is for you to buy, sell, recommend, sorry, for you to recommend which one, which shares to buy, to sell, and which one to hold onto. Okay, so that is it. All these things they are doing, the purpose is for them to recommend to their clients. Types of security analysis. We have fundamental and technical analysis. Okay, fundamental analysis is determining, assessing the intrinsic value of the firm through the channel called assessing the economy of the firm, of the economy that that particular firm you want to invest in the shares or you want to invest in their bonds are found in. So you probably look at their interest rate, you probably look at their inflation rate, you probably look at the economic GDP, and you look at all these things, okay? You probably would now let's even look at the industry. What's the competition in the industry? So is there any competition? Do even government care about that industry? Because there are some industries eh, even when it will not collapse, but government have so much interest in, and the country will lose a lot. Okay, now the industry, is it even easy for them to, for people to penetrate? You look at all these things. Now let's go to, then you go to that particular firm you want to invest in their financial assets. You want to look at their financial statement, you look at their profit over the period, you assess all these things to see that that particular firm is doing well. Okay, so this is what we call by fundamental analysis, assessing the fundamentals of a firm to know their what, their intrinsic value. Okay, then we have the technical analysis. That's the opposite of fundamental analysis. This one look at trend movement, trend assessment of the price of the firm. How is the price of the shares, the volume of trade over the period? We believe that the technical analysis is based on the fact that um, um, that the asset reflects all information, or let me say, I don't know whether they consider insider information, but I think at least all available information. Okay, history, historical data, news, it has reflected in all these things. Okay, so yeah, you cannot beat it. So all you have to do is look at the trend. Oh, so over the years, this particular shares have been doing well, they have been increasing, they have been, oh, okay. Okay, people are trading, the volume of trade is very high, people are buying. Okay, they'll let me go. So that's the difference between fundamental and technical analysis. Now we also have quantitative and qualitative analysis. Quantitative is when you want to use numbers and statistics to assess a particular financial asset. So sometimes we look at the profit, okay, earning of the firm. Sometimes we look at beta of the firm, okay. We look at the risks, probably standard deviation, the risk of the beta to its risk. Yeah, we look at all these things. Then we have qualitative analysis. This is non-numerical assessing of a firm, or of a firm that you want to invest in their financial assets. So now you, with this one, what will you look at? You probably look at the quality of their management. How strong is their corporate governance? You are probably going to look at their competitive advantage. So if you are here and ask me, invest in MTN, okay, MTN is there, Vodafone, Telecel, sorry, Telecel is there, LTE is there, what should I invest in? And I don't have any numerical assessment to do. I'll just look at, oh, but MTN have the goodwill, like MTN have the goodwill, so I'll go for it. Okay, without any numbers, without me looking at their profit or anything. I just know this is qualitative analysis. Okay, so that is it. Then we have top down, bottom up analysis. Now, top down up analysis is when you are looking from bigger picture to the smaller picture. So a typical example is you want to invest in a particular firm, but you're assessing the economy that it finds itself in. Then you go to the industry that it finds itself in. Then you go to A. It's like I'm explaining everything. Oh, that is even down there. Then you want to assess. You are also going to look at the firm itself. Okay. Then when you do bottom up, it means you start the analysis from the firm. After assessing the firm and it's okay for you, go to the industry. After assessing the industry and it's okay for you, go to the whole economy. Okay. So basically that is it. So you can see the fundamental analysis here. You look at economic factors like interest rates, inflation, GDP. Even people can look at the health in the economy. No, a company might decide not to come to a country because of galamsey, because he has learned that when he can even the water here is not what is not healthy, meaning that he coming down here with his worker, their health is being threatened. Okay, so all these things we have industrial factor company, and this is normally used to do what for long-term investment, mainly used for long-term investment analysis. Because looking at their profitability over a period of time, looking at asset and liability, look, this is a very strong assessment. Oh, it's very strong. So if you use it for long-term investment decision, it's better than looking at just that technical analysis, looking at price movement. If you go to stock market, if you go to Ghana Stock Exchange right now, sometimes if you have invested in a share, if you don't take it, you'll be discouraged unless you understand the market. Because today it's going up, tomorrow it's going down, you don't even know. So we will normally say that investing in shares has high risk because of price volatility. Price is moving anyhow. Things that you know that, oh, this thing over a year it has been moving up, it will be just come down. You don't know what is happening. Okay, so normally it's used for short-term investment decision. Okay, trading value, and they use chart. You know this. You've seen this chart here. That some is going up, going down. There's a trend of a particular um shares. Okay, so it's for short-term investment decision. And like I said, quantitative analysis, it uses what? Numerical data. Risk and return is one of them, because you're going to use rates, you're going to use the standard deviation. Okay, returns, you are going to use the mean to do it. We have CAPM and a APT also there. Then we move to management quality. That is qualitative. You look at management, you have to compare, we look at brand strength, we are looking at competitive advantage. So look at brand strength. Let's say even as you are here, maybe you don't know the corporate governance of a firm. You don't know management quality, but we know brand strength. That if you take the telecommunication, brand strength is MTN. Now we know competitive advantage. You know often that MTN is what doing well. Now let's go to banks. You know, if not for anything, if not for the behavior of sometimes GCB probably staff, that you see people in fact bombarding them online, that the way they behave, they don't care. And it's not like it's only the bank. Oh, it's like when the thing is government, it's like the person working probably do not care unless you meet few people that already have their, and the people condemn them a lot. But if not, they have brand quality, they have competitive advantage. I mean, I don't even know what they mean by competitive advantage, because sometimes me personally, I wonder why GCB with its large customer side will be charging higher electronic transaction than a bank with lower. Yeah, but the bank with the lower customers will probably be doing penetration. But I think they should be charging lesser. First, because government have high share there and we consider it as our own. So they should be charging us lower. Yes, that is one thing, because it's for Ghanaians, and anything government should be lower than private. Okay. Now let's look at that. Two, you have the large shares. So no matter the amount you take, eh, so you see that the only reason most of people are still there is probably because of salary. Okay. And I know someone who said he went to open an account somewhere for his salary. He didn't go through until he went to GCB to open. I don't know whether they intentionally did it or what. I don't know. That one I don't know. Okay. But these are some of the things that we could have said, oh, GCB has brand strength, probably it has. I don't even know whether I should put them at competitive advantage because when it comes to loan rates, they have a lower, like they have a very low rate. When it comes to commercial banks, they have a very low rate there, and management quality, I don't know, but corporate governance, um, probably they can afford the people with high knowledge. Now let's go top down versus bottom down. And I told you the top down is from the bigger to the lowest. So we are looking at the economy, to the industry, to the company. You want to invest their shares. Then we do top bottom up from the company to the industry to the economy. Okay, so that's where the analysis will go. Now I said before we say, oh, for us to appreciate the meaning, to understand the concept of securities very well. Okay, we need to understand its opposite. Okay, when they say come, uh, English, when they say come, uh, and you are coming, until when they are able to tell you go, means you should, I don't know what alternative word to use, but you should go back. You are backing back. Then the person will now appreciate the meaning of come more. Okay, because the person understands the opposite. So, in fact, assets in finance, we have rare assets, we have financial assets. And I've taught this in investment and portfolio. I said rare asset is investing in tangible assets like land, real estate, equipment, commodities. Okay, so these are the things that we invest in. They have direct impact on society. Okay, so that is it. Then when we come to financial asset, they are assets that are traded on the financial market, and it gives you a claim on it gives you a claim on FM, okay, on FM. So this one is said income or asset. So on FM, it gives you a claim on FM. So yeah, I'm a shareholder, so I have interest in this because when they do one, and all things being held constant, I'm going to get something out of it. In fact, if you all rush to withdraw our capital, the firm will collapse. So we are holding, so they have interest in it. If the person is a bond holder, the person is praying that the firm want the firm to do what, so they will pay at the end of they will be paying him or her his regular fixed income, and when it's mature, his actual investment will be returned to him. So that's the difference between real asset and financial asset. Financial asset invested in financial instruments. So we have two financial vehicles being real asset and financial asset. So the financial asset is what is traded on the financial market. Okay, the assets that are traded on financial assets, which only give you a claim over FM. Then when it comes to direct investment into the economy, then we are saying that is rare assets. So rare assets is tangible. Okay. Now let's go to types of securities. All right. We are starting with debt security. Okay. Debt security is simply known as bond. Okay, where you invest an amount and you will be promised a coupon payment over a period of time. And I know all of you understand coupon. So coupon payment over a period of time, and on maturity, you'll be giving your the amount invested plus the coupon and that period. So that is it. So when you say debt security, is when FM is owing you. So that's when you lend money to FM. Okay, and all you'll be having is a paper that's an agreement that yes, the firm is owing you. And as a typical example is treasurable. Okay, you go and you give money to government. You are lending money to government. Okay, to use it for a short period, and they'll give you it to you back with what interest. Then we have equity. Equity is shareholding. Equity is shareholding, and specifically ordinary shareholding. Okay, ordinary shareholding. The true owners of FM. These people invest their money into FM to become co-owners. So they have a claim over the firm. Okay, so that is equities. And then we have derivatives. When we talk of derivatives, they are assets who derive their value from their underlying asset. Okay, so I think we'll do examples of, we explain the derivatives, the types of derivatives. So let me not spend my time. We have hybrid security. Hybrid security here, we are looking at preference shares. Okay, we are looking at preference shares. So let's go. I think I've even explained it now. Okay, to debt security, I said what? Fixed income. The fixed income you'll be receiving regularly. Interest and maturity date. So you'll be given a specific interest they'll be paying to you regularly, and the period it will mature. It can be government or what, corporate bonds. Okay. Then equity give you ownership in a company. It gives you voting right, and you are paid dividends and what, capital gain. Derivatives value depend on its underlying assets. It is sometimes used for hedging and speculation. And I believe you understand hedging, right? It's used to lock in rate. Mm. And it's used to lock in rate. It is used in the international market. Probably if you want to purchase something, you can go and lock in rate. Like me, that I'm here, that I'm planning to probably buy something outside. If I had this influence, if I had this company, I could go and lock my I'll wait when probably dollars. I don't know what they were saying, but dollars, I can go and lock in at 10 cities. Okay, so that when the period is up, I can go and change it at 10 cedi. Okay, the same way this normal feature and forward contract, the purpose is to lock in the price that I'll buy it at this price. So that is it. So types of derivatives: futures, forward, options, swaps. So look at future. Future is an agreement or a contract where the two parties agree to execute the transaction at a future date, but the price is agreed now. Okay, and forward is the same. Okay, the same agreement to execute a transaction at future date. Okay, at an agreed price. The only difference here, please pay attention to this difference. Okay, the different futures is normally traded on organized stock exchange like Ghana Stock Exchange. So it comes with a standardized requirement, and it's more safe because which firm want to go and disappoint on Ghana Stock Exchange? So the listed firm, who want to go and disappoint? If it disappoints, it's affecting you, your credibility. Okay. So when they agree, they normally hold onto it and to be executed. Now let's look at forward. Forward is done by the private stock exchange. Okay. They say at the retail level. And in this one, because these people, the private ones, they are set, like let's look at the um maybe sorry, oh, I don't know. This rural banks, savings and loan, this microfinance, they say they come invest in their shares. They will be doing the advertisement privately. Okay, so you go to them. Okay, now let's say you want to go into forward contract with people like that. The two of you will come out with the agreement. Okay, and if you get there, and since it's not being regulated by any strong exchange or platform, the person might default or might not go through with it. Okay, so that is the risk. Then we have options. For options, it's also like future, where they agree to execute a transaction in future. But look at the name, options. Options, meaning that it's optional. It's optional, meaning they will agree on a date. But if you get, there's no compulsory for either the call option or the put option. Okay, so they are not, it's not compulsory. Then we have swaps. Swap is a form of agreement on exchange of a certain form of cash flow. Okay, and it can be a lot. It can be interest, it can be exchange rate, it can be anything. Okay, but you agree to change, do that cash flow. So that is it. All right. The hybrid securities. Like I said, it's preference shares. Hybrid securities preference shares. And they call it hybrid. When they say hybrid, it means it's kind of two. It has a two side, right? Now, this particular securities have two sides because it sometimes resemble debt security. It sometimes resemble um equity. In fact, it resemble debt and equity at the same time. Okay, it resemble debt because it takes a fixed return every year. But when you invest in preference shares, so I most firms don't even really like I don't I've not been seeing preference security even I've not been here, but I'll see. I'll check further on Ghana store. Oh, assignment. Assignment. Hello. Hello.
Yes, madam.
Hey, are you people with me?
Yes, doc.
Don't
Yes,
please,
Doc.
you are with
I
We are
want you
with
to
madam.
you.
go.
Madam, we are with
Yes,
you. We are
madam.
with you.
I want you to go and get this information for me by next week. You go and see whether preference shares are traded on Ghana Stock Exchange. When you go there, it will be there that it's traded. Now, I want to know the specific firms who are actively engaged in preference shares trading on Ghana Stock Exchange. That's my first assignment. Hello. Please,
Yes, madam.
you add the source to it so that I can go and check. Okay, you add your source to
Yes,
it, uh,
madam.
so that I can go and check. You are 11. I want you to divide yourself into three and do this assignment. Okay, so three groups. Okay,
Yes, madam.
so they resemble debt in that instance, and also because they have to consider their dividend payment before they consider the ordinary shareholders, the equity holders. Okay, so kind of we know that definitely a firm has to pay its bond holders before you consider the shareholders. Okay, so they are kind of being given preference treatment in terms of dividend payment. So they resemble debt instrument. Then when it comes to equity, they resemble equity because if they don't pay, no one will force them. But if you don't pay your debt, their coupon rate, you'll be considered bankrupt. If you are unable to pay, you'll be considered bankrupt. Okay, so that is it. Now, investment and speculation. Now, investment is assessing it's normally long term and loss. You definitely when it comes to investments, when you assess an investment, determine the returns and the risk after then you invest in it. Speculation is like betting, okay? You can lose all your whole money, but it's high risk, it's normally short term. And when it repays, the return is high though. But then I will not advise even my worst enemy to go into that because a senior or treasury from CCR eh, or trashy from CCI, if I'm there, I have to carry him or her to hospital by force. If you don't take it, you will spend in addition. Okay, so let's move on now. So the conclusion is security analysis is essential for informed investment decision and risk management. So um the finance you are finance people and you should be engaging in this securities. You can't be finance person, you are not investing in anything. How can you be a finance but you don't have any investment? Finance student who is working oh, you don't have any investment. If you are here, you don't have any investment. You have a big problem. But you should be advising your friends and your family member to invest. So invest in distance. You cannot be a finance student. They ask you question. You don't know anything about the financial. You don't know anything about stock market. You don't know anything. So I'm going to direct you to read on stock market, probably how to. I've given you the first one is find the firms that are actively engaged in what preference share investment. I also want you to do investigation on how to invest in shares and bonds in Ghana or on the Ghana Stock Exchange. And if there's any difference between invest, are you writing?
Yes, madam.
If there's any difference in the process between investing in shares and bonds, you have to highlight it. Okay. So I think the next thing is the development. There have been some development. I don't know why I didn't add it to this presentation. There have been some development, making things easier for us to invest in shares. So some of the platforms that is making that is using electronics or technology to make investment in securities easy. I want you to identify them, their strength, their weakness. Then out of all of them, I want you to recommend the best one you will choose if you are to invest. Okay. And I'm taking this next week. Next week, I'll take soft copy, I'll take hard copy. For those of you that when they give assignment and it's group assignment, that's when you sleep. You don't do it. And the funny thing is you repeat the same question in exams and the person will not do it. You don't even know when they even did it, whether the person didn't read it. They just brought it to you. Because there's a way that if you do investigation, if you do assignment yourself, even if you don't learn it, there's a way you can produce something. And I think I can produce 60-70% of the thing. Because for you to learn, read, investigate before you put the thing on paper, okay, so this is the assignment, and I don't know. So I will probably upload this on the platform, okay, YouTube platform, okay. So I hope